Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about the third quarter earnings results for Devon Energy. And as we can see right here, Devon Energy is up about 60 to 70% over the last year, where the overall market is down about 15%. So Devon Energy has definitely had a really good year this last year, the last 12 months. And so in this video, I'm just going to look into their financial statements to get a better look at the third quarter results. And then I'm going to figure out what the intrinsic value per share for Devon Energy is, so we can know if this is a good buying price to buy into Devon Energy from a value investing perspective. But before we get into that, we can see right here this article that I found about Devon Energy titled "Why the Stock Dropped Today," particularly around when they announced earnings. We can see they make 2 points here where they basically point out that Devon had really profitable operations in the third quarter, but the projected increase in production costs is what drove this decrease in their stock and spooked a couple of investors to take profits. And so we can see, if I scroll down here a little bit, up there they talk a little bit about the financial metrics, but I'll get into that in a little bit in the video. We can see right here, they point out that the cash payout to shareholders at Devon Energy experienced in the third quarter increased by about 61% year over year. So they're definitely prioritizing returning value to their shareholders a lot more this year in comparison to last year. But particularly right here, they point out why the stock dropped, and we can see management of Devon Energy basically anticipates that their capital expenditures are going to increase to about $845 million, or around $915 million, around there. So that's obviously going to eat into their free cash flow metrics, and it might actually end up being a net negative for Devon Energy's business, especially if in the future the economy sinks into a recession or oil prices fall as a result of different legislation that might get passed by Congress that might target some of the profits that these oil companies have made over the last year. And so those two reasons are the main reasons why Devon Energy's stock plummeted a little bit when they announced this news. And so we can see right here their financial results for the third quarter for 2022 compared to 2021. And basically year over year, we can see that their revenue has actually increased by about 57%, from $3.4 billion to about $5.4 billion year over year. And then if we scroll down here, we can see their net earnings attributable to Devon Energy comes out to be about $1.89 billion, up from $838 million in the third quarter of 2021. So year over year, that's an increase of 126% for their bottom line net income here. And then for their earnings per share, or per diluted share, including stock options and things like that, we can see that that increased from $1.24 per share to $2.88 per share. So that's an increase of 132%, even bigger than the increase in net earnings, which basically tells us that not only are their net earnings per share increasing, but their total shares outstanding for their company, that metric is actually decreasing. And so as a result, their earnings per share ends up increasing even faster than their net income does for the entire company. And so if I scroll down to page 7 here, we can see that their statement of cash flows, and comparing to third quarter results for 2022 to 2021, year over year, their operating cash flow has increased by about 32%, from $1.5 billion to $2.1 billion. And also, if we look at their financing activities, we can see right here something that the article pointed out, which is that their dividends paid on common stock has increased a lot over the last year or so, from about $329 million paid out to shareholders through dividends in 2021 in the third quarter, to about a little over $1 billion worth of dividends paid out to shareholders. And then on top of that, Devon Energy repurchased about $126 million worth of common stock, whereas in the third quarter of 2021, they didn't repurchase any common stock. So definitely this year, because of the fact that Devon Energy has been experiencing such a larger influx of profits as a result of the increased prices in oil, they're definitely trying to return a lot more value back to their shareholders this year as opposed to last year. And lastly, right here on page 8, we can see their balance sheet year over year, or not year over year, but from December 31st to September 30th, their total assets have increased from $21 billion to $23.5 billion. And we can see that in their equity section on their balance sheet, that the retained earnings line item has increased pretty substantially from about 1.6 billion to 3.9 billion. So that's more than a 100% increase in retained earnings. And on top of that, we can see their additional paid-in capital line item, which basically tracks the amount of shares outstanding basically they have, or not shares outstanding, but the amount of equity they have in their company. We said that has decreased, which is actually a good sign because it means that there are less partners in the company compared to where there were a year ago. And if there are less shares outstanding because they're buying back shares, but their net income is increasing, that results in an even faster increase in the share price of their company's stock. So definitely a lot of good things here, a lot of green flags in their stockholders' equity section on their balance sheet. And so right here, I have my discounted cash flow model to try to figure out what the intrinsic value per share for Devon Energy is. And Yahoo Finance is estimating that this company is going to grow at about 37% compounded annually for the next 5 years. So I was conservative and I cut that value in half to 18% for the next 5 years after that. They had about $2.8 billion worth of free cash flow in 2021. They have about $5 billion worth of debt on their balance sheet, and they have about 653 million shares outstanding. And so with these metrics in mind, their intrinsic value per share is estimated to be about $225, with $112 per share being the 50% margin of safety. And we can see that Devon Energy is trading at $69 per share. So not only are they trading way below their intrinsic value per share, but they're also trading way below their 50% margin of safety. In fact, this comes out to be about a 70% margin of safety relative to their intrinsic value per share. So that is a very deep discount for Devon Energy, especially considering the fact that the stock is up almost 70% over the last year, and they're still trading at that deep of a discount based on these projected growth rates from Yahoo Finance. And so if I scroll to the right here, we can see I did a competitor analysis comparing them to their competitors from a financial ratio perspective. And by and large, across all areas of their business, gross profit margin, net profit margin, and return on assets, Devon Energy is doing way better than the rest of the bigger competitors in their industry. ConocoPhillips, Chevron, Occidental Petroleum, and ExxonMobil. They have a highest gross profit margin and net profit margin, definitely eclipsing a lot of their competitors, especially Chevron, Occidental, and ExxonMobil. And the return on assets is way more than the three companies I mentioned. The only company that comes close to being competitive is ConocoPhillips. But even then, Devon Energy's return on assets is almost 2 times that of ConocoPhillips, and their profit margins are way higher. So from a competitor analytical perspective, looks like Devon Energy would be the buy to buy into this stock if you were going to choose one of these oil companies from a competitor analysis perspective. From an intrinsic value standpoint, we can see Devon Energy is trading at a very steep discount, about 70% below this estimated intrinsic value per share. On top of that, we saw in their financial statements that their earnings growth is absolutely monumental. It's grown by about 126% over the last year, and their stock price is up about 70% over the last year. So it's definitely been a really good year for Devon Energy. The only real question mark here in terms of valuing this company is whether or not they'll be able to continue to grow their profits at this rate, at the same rate that they've grown their profits over the last year. Obviously, the Biden administration and some other things that are coming up, like sanctions on Russia, these are going to have an impact on these oil companies in the future. And so it might be a negative impact, it might be a positive impact. But based on that, there is a little bit of uncertainty surrounding these oil companies as to whether or not they'll be able to continue to grow their profits at the same rate that they've experienced over the last year or 2 years or so. So I'm not sure what to think of that, but from an intrinsic value standpoint, a competitor analysis standpoint, and just looking at their financial statements, looks like Devon Energy might potentially be presenting a very strong buying opportunity. But I'd love to know what everyone watching this video thinks about Devon Energy. Are you guys holding any shares of this company? Let me know in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.